In this presentation, we will take a look at our comprehensive problem. First thing we will do is go through the data within that comprehensive problem. Our data is going to be up top in the Excel worksheet. It will be in white. In other words, the data input sections will typically be in blue. So the white area up top will be our data. Note the data format has been broken out for us in Essence already, in that we're going to have the text, we're going to have the numbers that will be involved in a separate cell, and then we'll have any other kind of data that's going to be in a separate cell. The reason is that we want to be able to use these numbered cells as references as we go through the data. Note that if you're taking a problem or looking at a comprehensive problem or any problem from a book or some other area, you want to put it into Excel in this format typically. It will really make the process a lot easier. If you take the information that might be in a text type format, if you see any numbers in a text format and paragraph format, what you want to do is break it out and say, okay, here's my data up top on my worksheet. Here's the actual description. Here's going to be the numbers. And then when you go through the calculations, you can always refer to it with cell references, referring to the numbers. That'll make the process much, much easier. It's already done in this format here. Just be aware of that. That's really where you want to start. So let's go through the data that we have. First, we have the standard costs. We've got the direct materials in terms of units, 3. We've got the direct materials cost, 5 per unit. So the total direct materials is 15. Again, note in a book type problem, you probably might see this in one kind of paragraph format, saying the direct materials is 3 units and the direct materials cost is 5 for a total direct materials of 15 in like a paragraph or sentence format. You want to break it out in a format such as this in Excel so that you can then have those component parts which can be useful or will be needed in the calculations, and we can do that without hard coding numbers but refer to the items in the text within Excel. So again, very important, break this information out, make it easy on yourself at the beginning so that you can then go through the problem and it'll be a lot more efficient to do so and make changes and think through the process in a format such as this. Same with direct labor. Direct labor, we've got the units, we've got the cost per unit, the total, then multiplying those two out. Overhead, we've got the units, 1.9, the overhead cost per unit, multiplying those out. And then we have the totals, which is the total direct materials, labor, and overhead. That gives us the 69.15. And then we have the predetermined overhead rate per direct labor hour. We've got the expected volume, meaning this is what we expect to be producing at. In other words, capacity or total is 20,000 units. If we were to max out our production, we would have 20,000 total units. We're producing at 0.75 of capacity or 15,000. So we're producing 15,000 or that's what we're expecting to be producing. So 75% of total capacity. And then we have the overhead budget at 75%. So this is what we budget to happen at that 75% of capacity. We've got the variable overhead costs, indirect materials, indirect labor, power, repairs, and maintenance. That's going to give us the 135,000 total variable overhead costs. Then we've got the fixed overhead costs, the depreciation, taxes, insurance, supervision, total fixed overhead costs. And then that'll give us the total overhead costs, which of course is the variable and the fixed components. Then we have the actual costs. Now note that as you're looking through the data, you want to be thinking this, that you're going to have, okay, here's the standard cost, which is what we expect to happen under normal conditions. You can also probably think of it as the calculation that will happen before the time period goes by. So this is kind of like the budgeted cost. You would kind of think of it as the standard costs, the budgeted kind of component cost, the cost that we probably use to put the budget together. And then we're going to think about, okay, now here are the actual costs, which that would happen after the time period. In a book problem, they would be given to us, we'd have to basically visualize this process. In a linear process in time, we would expect the standard costs to happen, then the actual costs to happen. We know what the actual costs are because the time has passed, and therefore we know what has actually happened, what has been paid. So we've got the direct materials in units, the direct materials rate for a total, if we multiply those out, of the 232.50. We've got the direct labor units, direct labor rate for a total direct labor. And then we have the overhead. So the overhead costs, including indirect materials, indirect labor, power, repairs and maintenance, depreciation, taxes, supervision, total overhead costs, total costs, actual costs then being the outer column here, including the direct materials, direct labor, and the overhead. And that'll give us the total costs. Now, of course, we'll go through this and we'll compare those standards to the total costs. We're going to start with a flexible budget. So we'll put in the flexible budget at different capacity levels. Remember, our capacity was at the 75, but we're going to put the flexible budget together so that we can use that and we have the most flexibility to make adjustments if necessary to any kind of basically capacity level we have. In other words, how many units we will produce basically. And then we're going to have the direct materials cost variance. So we'll go through the cost variance, comparing the standard to the actual for the direct materials. We'll do that calculation a couple different ways. So we'll be able to see how to get to there a few different ways. And then we'll have the direct labor cost variance. And again, we'll show how to get to the direct labor cost variance a few different ways. And then we'll have the overhead variance report, and we'll go through the overhead variance report.